This
We can do it
conference
after
will now
class.
be recorded.
So that, but see, what we're doing now covers some of those entries. So we're on adjusting entries, and we said that adjusting entries were entries that needed to be made. I think I had a better summary in here. And I put this handout in here for you, Chelsea, since I figured you didn't get the new book. So, important rules for adjusting entries. First of all, cash is never involved in adjusting entry. It might be involved in a preceding entry, a later entry, but for the adjusting entry itself. Secondly, it involves an income statement, account, revenues and expenses. That's the right side of that chart of account, and the balance sheet, which is the left side. So those give you some guides. And what we're going to do today, I think, is go through, and most people should have this, but we're going to look at, okay, let me go back up. There are 4 types of adjusting interest. You got prepaid expenses and unearned revenues. These are the furloughs where cash has already been received. That's what we're going to work on today. And then on Thursday, we'll work on accruals where the cash is paid later. So on the furlough, that's all we're doing today. The cash is paid or received prior to the adjusting entry. And we're going to start with unearned revenues, which I think is one of the easier ones. So what is unearned revenue? If I ask you what was unearned revenue, what would you tell me from last time? Unearned revenue occurs when a company gets cash prior to the performance of the services or good. You got to have those NICAs. You putting down a deposit. You got to have this particular gain. You putting down a deposit. Well, for the company, they're just so happy because you're paying in advance. When you buy airline tickets, you have to pay in advance. When you get magazine subscriptions, they want you to pay in advance. Okay. So they're going to make an entry debiting cash and crediting unearned revenue. So that's the first thing they do. They get your cash and they make this entry. And we said that what type of entry was this? A debit to cash and a credit to unearned revenue. What type was that? Yeah, I suppose I always had on. That's a 4. Thank you, Ms. Angela. So that's a 4. And what type of account is unearned revenue? Where is it located on your chart of accounts?
I'm looking. Hold on. Unearned revenue. I see unearned income.
Unearned income, unearned revenue.
Okay, it's a current liability.
Okay, so it's a lot. So what does that tell you? If you're running a company and you get cash in advance before you perform services, it's a liability because it could be paid back. When you perform the services, that's when you recognize the revenue. So let's look at this. GameStop collects $50 in advance from 200 customers, okay, for a game that's going to arrive in 2 months. So they go through and they make an entry debiting cash and crediting unearned revenue because they have the money. It's not earned revenue yet because they hadn't performed the services. Then when the customers come and pick up the games, That's when they make the AJE. So this is a preceding entry for. We got the cash in advance. Then once we perform the services, we debit unearned revenue and credit sales.
Also, AJE it's like after the service.
Right. So it's an adjusting journal entry. That's what AJE stands for. AJE, adjusting journal entry. And we're going to work some in a few minutes. So when the cash comes in, you have a credit to unearned revenue. It's not earning it, it's a liability. Then when you deliver the gains, you make the adjusting entry, you close out the unearned revenue, and then you credit sales. So this is a liability, so this is not going to be on the income statement, it's going to be on the balance sheet. But then once you perform the services, then you debit unearned revenue, you close that account out, and you credit sales and you recognize the revenue. Now that is not that hard, is it?
So we
It's not.
Say what?
so we document saying AJE underneath it though?
I just did that for you, but you don't have to.
Okay.
But the main thing is, yeah, you're gonna put a 4, and then the AJE type is 18. That is there. If you look at your types, there's 18 where, you know, these are listed. So we move into some of those other journal entries. Okay. So let's see if we can go down here as we did with those financial statements. Okay, so one thing is, if you see here, we're at unearned revenue. There are 4 types. We're doing 1 and 2. And notice what it says. Before the adjustments, liabilities are overstated, revenues are understated. And this is the type of, these are the accounts that are debited and credited. And it says there was a preceding entry. So for 1 and 2. So this is a nice little chart that summarizes everything as you go through. Here's your chart of accounts, where with your chart of accounts, you have the assets and liabilities on the left and the expenses on the right. And you notice something that I've done here with the unearned revenue. I'm saying that that account goes with AJE2. So you may get you a separate chart of accounts here. So what I tried to do was, okay, what accounts involve for which AJEs? So unearned revenue and sales go with AJE2. So there's another one too, but so I tell you what accounts are involved. So with this chart, and I think I sent this to you all, didn't I? I believe I did. So
It's not
with
in this
this chart,
packet.
it's not in the package.
I didn't see it. That says adjusting entries. I don't see it.
What do you have? Do you have? I may have put this in there later.
Oh, okay.
Well, you know, the best thing for you to do is to make your own chart. So you know that when we're talking about AJE2, it's 305 and 500. Those are the accounts. So let's go see if we can go down here and find some unearned revenue. Here we go. So in 21, It says assume GameStop in 2017 received $1,000 from customers for $50 for NBA 2K18. So that happened all through 2017. Then by December 31st, 900 customers have picked up their games. Record the entry to record the receipt of $50 from 1,000 customers. Then make the journal entry to record the delivery of 900 games. So your task is to make those 2 journal entries. You got 5 minutes. 2 minutes for one journal entry and 3 minutes for the next. Don't make it this one hard. It's the easiest one. So you're required not to make it hard. Make my 2 journal entries. Got them made?
I think so, yeah.
So let me just clear this out. And we're dealing with AJE2. Okay. So what's the first entry we're gonna make?
Well, so wouldn't the first one be cash and then unearned revenue?
That's correct. So, and this is always gonna be the entry.
Always is gonna be like that?
These are the accounts. So whenever we have an AJE2, so unearned income, unearned revenue, the same thing. That's the entry you make. Okay? So we just have to calculate the amount.
It's gonna be 50,000.
So 1,000 customers paid $50 each. So we have cash of 50,000 and unearned income of 50,000. We said that was a type what, 4. Now, the next thing it says is that 900 customers picked up the games. So, when this happens, some people will not go back to pick their games. They may move out of state. Various things can happen. They may forget about it. They may become ill or something. So in this case, 900 customers picked up the games. So get these out. So what's our journal entry going to be? It's always going to be the same. What's our type? What did I tell you that type was? Was it
One?
54.
No, we got 4, that's the 4. That's what make me-
18.
18? All
Yes,
right,
18
what are we debiting on the 18?
unearned income. And then it will be sales.
What do we credit?
Sales.
Okay, credit sales. So it told us what? 900 of the customers picked up the games, right?
So wouldn't that be like 45,000?
That's right. So now we've earned 45,000.
So then what happened to the other 5,000?
Well, Christian, suppose you were running GameStop and we're giving it to a Christian and everything. I know what you do, but you got this 5,000. So you can do one or two things. You can go out and find the customers and give them their money back. Well, you didn't come, so I'm gonna give you your money back. Is that what you're gonna do, Christian?
If I was a business, yeah.
So you're gonna go
Unless I
find the
keep
customer
it.
money back.
Yeah.
What you gonna do, Chelsea?
I don't know. I'm sorry.
Well,
I'm gonna
it's
keep
kind
that money.
of Angela, what you gonna do?
I'm gonna keep that money and find a way to write it off.
You can't write it off. What?
I'm gonna keep that money.
Can you get
It's
sued for that?
all the time, and people don't come get them.
But
So
can you
they
get sued for that if you don't like return the money?
find the people. So they got an option. They can just leave it there. First of all, they got the cash, okay, and they've ordered a game. So what they'll do, Christian, if you don't pick up by December 31st, then they sell the game to somebody else. So they have they have this 5,000, then they get another 5,000 because other people buy the game. So that's how the company's going to operate, and they're not going to be looking for anybody to give it back to them. They don't know where the people are. They don't have addresses and stuff like that in detail. They may have some basic contact information. Got it? Now,
Yeah, got it.
if it was a major purchase and you knew who it was, then you do something like, okay, you pay the people their money back and you would reverse this interest. So you debit unearned income and credit cash if you knew who the people were. But were you mass selling something, it takes time to go find people and give money back to them. So it just stays with your company. So whenever we're doing AJE2, that's first of all a journal entry 4, where we debit cash and credit unearned income. Then there's a journal entry 18, where we debit unearned income and credit sales. Now you all be ready to work the next one by yourself. So in 23, 2,000 customers pay $50. And then 1,500 of the customers pick it up. Can y'all make these journal entries? So we get money from 2,000 customers and 1,500 pick them up. All we got to do is change the amounts. Okay. How much cash do we get?
100,000.
So 2,000 customers, 50 is $100,000. And how many of the customers picked up the games? $900 customers picked up the games. So how much of this income have you earned? How much is it? So what?
You said how much do we earn?
Yep.
Isn't it 45,000?
So what?
Isn't it 45,000 or is it?
Isn't it 75,000?
Wait a minute, let's look at this problem again. 2,000 customers and 1,500 picked up the games.
Oh, oops! I was using the wrong numbers.
Okay. So how much did you say?
75,000.
I get 75,000. Well, 1,500,
1,500 times 50.
yeah, it's 75,000. So GameStop and other companies are doing this all the time. When they get the cash in, they debit cash and credit unearned income. Then when they pay, when the people pick up the games, the income is no longer unearned, it's earned, so they debit the unearned account and credit sales. Any questions?
So far, so good.
So far, so good. Do we need to work with another one? Are we all right?
Mark another one.
Yeah, let's just do another one.
Hey, I do have a question. Never mind.
Go ahead and ask your question.
No, I don't.
Let's go to number 24. Work 24. So how much cash did they get?
$75,000.
Got 75,000. Then how much did they earn?
$60,000.
I get 60,000. 1,200.
Only 1,200 people actually picked them up. So yeah,
Okay,
that's what they actually earned.
60,000. That's correct. Okay, so that's unearned revenue. So that's not, that's the kind of the easiest one. And there are others like that too. But some others are not. So the next one we're going to look at is prepaid expenses. When they're prepaid expenses, you pay the expense in advance. So on unearned revenue, we got the cash in advance. On the prepaid expenses, we pay for the item in advance. Okay. So let's look at some examples. Most assets are prepaid expenses, but they debit to an asset account when acquired. So there's always an entry debiting the asset and crediting cash. Our accounts payable, but you eventually got to pay the accounts payable. Some prepaid expenses expire with the passage of time, such as insurance, depreciation on autos, others through usage, such as supplies. If you don't make the AJE, then the assets will be overstated. So we have a lot of accounts. So you only had one account that you're dealing with before. Now for prepaid expenses, you got supplies, prepaid insurance, autos, billings, and equipment. So a full range of assets where prepaid expenses may have to be made. Let's look at supplies. You buy some paper and pens and this and that for your office. And you could record them as you use them. Every time somebody uses paper, you could record it, but it might be easier just to say, I'm gonna buy the supplies for $5,000. Then if I got $2,000 at the end of the period, what had to happen? So if I bought $5,000 worth of supplies, then I do an inventory at the end, I got $2,000, what happened? If I had 5 steaks in the refrigerator at the beginning of the period and only 2 at the end of the week, what happened?
You short 3 steaks?
People ate 3 steaks.
Oh, duh. Okay.
they used them.
Okay. I
But
got
as
you.
long
I was
as it's
thinking,
in the refrigerator, they're an asset.
okay.
Once they go out, they're an expense. So when we buy the supplies, we debit supplies and credit cash, okay? We got it as an asset. But when we take that inventory and it's only 2,000, that means what? What happened? We used 3,000 in supplies. So we must debit supplies expense and credit supplies. Okay. The T account supplies have 5,000 in it when we bought the supplies. After we make the AJE, we credit supplies and we debit supplies expense. Supplies expense now is 3,000 in it. And we're gonna close it out with the closing entry at the end of the period. I'll just take those out for now. We don't look at too many things. So buy the supplies, we debit it. When we use them, we debit the expense and we, credit supplies because they're gone. So individually, you probably enjoy buying 5 steaks, but once you start eating them, if you eat 2 of them, 3 of them, you only got 2 left. Now it's an expense. You don't have it anymore. So in a company, we buy the supplies, it's an asset. But then when we use the supplies, it becomes an expense. So it was an asset, now it's an expense. And we take the difference between how much is in the account and how much is in there. So how much was in the account at the beginning, how much is at the end? So most people, you have an adjusting entry for supplies. So you're going to have all your supplies in there. You're going to look at the balance and take the difference. Are there any questions?
Can we do an example?
Pardon?
Can we do an example for this one, for supplies?
Sure. We would do numerous examples. So let's get to our problems. So once again, on prepaid expenses, we're going to debit an expense and credit an asset. So you already know that. Notice our chart of accounts. Supplies is on AJE1. And there's some other items with AJE1s on them. And there's expenses. So, you know, it's going to be on both sides. So this shows you where the AJE1s down. We work with supplies right now. So let's see if we can. Let's look at the first example. See if you all can work this first example. Everybody see the numbers 25 and 5,000, right? So that's 2017. So I want you to see if you can work the first example. As I clear out my accounts. Let's clear out some space. So y'all, can y'all make the entry to buy the supplies?
I think so.
So what you gonna debit?
I made myself, but I made it right out of a building.
Supplies
We're gonna debit supplies
and then credit cash.
and credit cash for how much?
25,000?
Yep, that's all it is. Y'all wanna make it hard.
I don't think it's us making it hard.
But what? Oh, the number's not given to you. So
Mhm.
every time we buy supplies, we're gonna have some sort of preceding in. AJE, I just come down here some, that's going to occur on December 31st. So when we're doing supplies and we make the AJE, what account are we gonna debit?
Supply expenses.
Supplies, expense.
And what you gonna credit?
Supplies.
Okay. Supplies. Over here, son. So we're gonna credit supplies. Okay. Okay. If we look at the T account for supplies down here somewhere, right now that T account for supplies has what in it? 25,000, correct? At the start of the period in 2017. At the end, it was 5,000. So what does the AG have to be?
10.
20.
Oh, 20. You're 20. You're right.
We had
20,000.
25 here, so this becomes 20,000. So, and once again, AJE doesn't change. There's always going to be these numbers, 20,000. I mean, these accounts. So is there anything difficult about that now?
What type would that be? Or is there a type that goes with that?
There's a type, is that 15? Now, when we buy the supplies, we're buying an asset. So this is going to be what type, what? 7? And then
Yeah,
Yeah.
for utilization of an expense, which one is that?
13.
So whenever there's AG for supply, like this. Any questions?
I didn't hear the last part that you said because Miles' mic was on.
Whenever supplies is involved, you're going to debit supplies and credit cash, or you could debit supplies and credit accounts payable. These are all preceding entries. You can have more than one, but the AJE always going to look like this at the end of the period: supplies, expense, and supplies. And what we're going to do is we're going to go to the T account. How much is in there at this point in time, or was in there? What's the ending balance? And this difference is always going to be the AJE. Okay? Do we see that?
Yes.
Sir.
Okay. Well, let's see how seeing is coming. I think these put them back this way. Let's move on to the next year, 2018. So we're still dealing with supplies. So this is 2017. So in 2018, JHJ Rental Car Company purchased supplies, paying cash in the amount of $15,000. Then it purchased an additional $25,000 in supplies on account. At the end of the period, supplies is $10,000, but don't forget about the $5,000 you had at the beginning of the period. Okay, so what they're saying is this. When we get to 2018 now, we already got $5,000 in the account. Okay, when we get to 2018, we already got $5,000 in the account. Any questions? Uh-oh. Okay. Now, what transactions do we have? It says in 2018, we paid cash of $15,000 and we purchased $20,000 in supplies on account. So $15,000 and $20,000. So when we get to 2018, we debit the cash for how much? How much did we debit cash for? Y'all getting Alzheimer's. We debit the cash for 15, excuse me, credit the cash for 15. So 15 and 20 are our amounts. So in one entry, we paid cash of $15,000 for the supplies. That over. Then we bought $20,000 on account, correct?
Yes.
So we got to make an AJE again. So this is the AJE for 2018. Now this one was the one for, I guess that's the one. Was that the one for 20? Well, this is the 2018 AJE that we got to make. So let me clear this out. Because every year you make an AJE. So now I got to get the AJE for 2018. Now, let's look at our T account for supplies. When we come in the year, we had 5,000. Okay. We got another 10,000 because we bought 10,000 for cash. Then we bought 20,000 on account. So right now, supplies has 35,000 in it. What does it say the ending balance for supplies is? What is our ending balance for supplies? They say in the problem. Says supplies has $10,000 in it.
So does that mean we spend the 25?
That might be a good assumption. So if we got 5,000 from the year before, then 10 and 20 for 35, and it's now 10, then the AG has to be what? 25,000. So that becomes the AJE. So we go back up here to this entry, and we're going to debit supplies expense for 25,000. And we're going to credit supplies for 25,000. So that's just a situation where you have other amounts in there, but we're fundamentally doing the same thing. We had this much in there at the start of the period, 5,000. We bought 10 and 20, so we're up to 35, but the ending balance is 10, so the AJE is 25,000. So let's see if we can work one more like that. Maybe two more. Go ahead and do number 3. And then once you do number 3, do 4. So what I want you to do is do 3, then do 4. Okay? You think we can handle that? So these are companions with the shoe company now. Something happens in 17, there's an AJE. Then we get to 2018, there's another AJE. Can we handle it?
I believe so.
Okay, we'll give you 5 minutes or so to handle it. Are we ready? Are we ready? So in 2017, we purchased supplies on account costing $15,000. At the end of the period, we had $5,000. So we should be able to handle that, correct? Says we purchased $15,000 on account. So rather than cash, we just make this accounts payable. And our amount is $15,000. So in 2017, entries, same thing. In terms of the debit, it can be accounts payable or cash. So now when we go down here, we have 15,000 in the account. And it tells us the ending balance is how much? Says the amount on hand is $5,000. So what must our AJE be?
$10,000?
Should be 10,000. So the AJE is the difference between what was in the account and what's left, what we put in and what we left. Think about your bank account. If you put 15,000 in it at the beginning of the month and you got 5 at the end, then you must have spent 10. So you see this stays the same. We just debit supplies expense for 10,000 and credit supplies for 10,000. Okay. So we're now ready to go to 2018. So see if you can do what you need to do for 2018. And then change it up to tell you how much to, okay. Okay, so when we look at 4, it says that they paid cash to 5,000 and purchased an additional 10,000 on account. So their cash purchase was 5,000. and their purchase on account was 10,000. So we now need to put those in the T account, but this balance of 5,000 for 2017 comes over. So that's 5,000. Then we're gonna put the 5 and the 10,000 in the account. So how much do we have in the account now?
20?
So we add these up, you're saying this is 20,000. And what's the balance that says that's in the account? What does the problem say is left at the
Wasn't
end?
it, wasn't it 4?
4,000.
So then AGE will be 16,000?
16,000. And so we come up here, debit supplies expense. And credit supplies. For the 16,000. So as you can see, unearned income is a piece of cake, right?
Absolutely.
Okay. So that's supplies. So on your study problem, you might have 5 or 6 entries in here. Then it tells you what the ending balance is. You take the difference for your AJE for supplies. Got that, Chelsea?
I got it.
Okay. It is now time to move to prepaid insurance, which is also going to be a prepaid asset, which you pay in advance. How many people have cars? And if you got a car, when do they want you to pay your insurance? When do you have to pay insurance on a car?
Every month?
After the year's over? How many people pay for insurance after the year's over? After you've driven?
I don't do that.
Say what?
I do not do that.
Oh, okay. You have to pay in advance. So you're running a company, it's the same thing. So let's, you buy insurance just like you got it, protect you if you have an accident. Companies have to buy fire, theft, and all kinds of things. Cold weather insurance now. Okay. And so as the insurance expires monthly, we're going to debit insurance expense and credit prepaid insurance. So you bought insurance before. So you got that preceding entry, debit prepaid insurance and credit cash. Then as the insurance is utilized, you debit the expense and credit prepaid insurance. So it says, let's assume that you bought a 12-month policy on April 1st. So Christian, you bought your insurance on April 1st and you paid $24,000 for it. So this is the entry you make. You debit prepaid insurance and credit cash. Got it? Type 7.
Uh-huh.
Now, when December 31st rolls around, assuming you got a 12-month policy, how much of that insurance has expired?
I'll say 20.
How much is that insurance costing you per month? How much?
Wait. Let me, hold on.
If you got a 12-month policy,
2,000?
24,000, about what is the monthly amount of insurance that's expiring?
2,000?
I hope you said 2,000.
I did.
Okay. So 12-month policy, 24,000. 12 into 24 goes 2,000. So this insurance is expiring at the rate of 2,000 a month. So from April 1 to December 31st is how many months?
Like 6 or 7.
8.
How do y'all keep count? Count again, Ebony.
You said from April to December, right?
Yeah, April 1. So count April.
That's like 8.
Yeah. April. 9.
Thank you. So you got to count. It's April 1st, so you got to count that month. So on December 31st, 9 months of this insurance is gone. So how much of the insurance has expired? It was at the rate of 2,000.
18,000.
18,000. Thank you. So all you do, you debit insurance expense, credit prepaid insurance, 18,000. So you had 24,000 in the account. 18,000 expires. You got 6 at the end. So here, the asset is going away by time. With supplies, it was usage. Here is time with a set amount going each period. So when you got insurance, you figure out the monthly rate, which is 2,000 in this case. Then you figure out how many months has expired. You multiply the monthly rate 2,000 times the 9 months expired, and you get this entry. So let's see if you can work one by yourself. That was not that bad, is it?
A little tricky.
Say what?
Just a little tricky.
Why? Oh, because you can't count your months?
No, that's because I can't read.
Oh, okay. Let's see if we can get here. Prepaid insurance. Supplies one. So let's just look at this first one. On April 1st, the shoe company purchased a $1,200 monthly insurance policy for $1,200. What adjusting entry would you make on December 31st? What adjusting entry would you make on December 31st? Can you buy the insurance? Can y'all buy it?
No.
You can't buy it? You don't have
No,
$1,200?
you can buy it.
So we're going to debit prepaid insurance and credit cash for $1,200. So
Okay.
if it's 12-month policy, what's the expiration rate? $100 a month? And how many months have gone by?
It's like, isn't it like 250?
I don't know. If I
Wait,
had
oh, no, wait, you're looking at number 7?
$12 and I divided by 12, what would that be?
You're looking at number 7, right?
Yeah,
Oh, that's on me. I'm sorry. I was looking at the wrong one. No, because it's $100.
so that's $100 a month. How many months gone by?
12.
Now, April 1st. So how many months gone by?
So 9,
9. So what's the expense gonna be?
900.
So your debit insurance expense and credit prepaid insurance for 900. Let's see if we can do number 9. Make me proud. So the first thing I'm gonna do is make an entry doing what? Debiting what?
Insurance policy,
Prepaid insurance
prepaid insurance,
and credit cash for what?
for 150.
No.
No?
All you're gonna do when you buy an insurance policy, you're going to debit prepaid insurance. I need to put my accounts down here. So you're gonna debit prepaid insurance for $1,800. And you're going to credit what?
Cash,
Cash. For how much?
180.
For about $1,800.
No, yeah, 1,800, sorry.
Pay all your cash. Now, the next thing we're gonna do is y'all need to do is come up with a monthly rate.
Monthly rate is 150.
'Cause it appears that some of y'all was on sleeping when y'all had division lessons in elementary school. So we just divide 12 and 1,800 and we get what? 150.
150.
Okay. Now we need to make the adjusting entry. I guess we need to get the number of months, but let's make this simple.
7.
Oh, I tell you. Well, y'all weren't paying attention to that lesson.
Nine.
It's 9.
Oops.
Oh, goodness.
Wait, you said the number of months
They
from
have gone. And it's
It's so
July.
high.
So how many months to Christmas from July 1st?
Oh.
six,
Oops. 6.
5. Wait.
Gotta count July.
Yeah. 6, yeah.
So it's 6
Oops.
months. So your AJE is gonna be what?
1,000? No.
900
900.
because it's half of it.
So yeah, 1,800. We're gonna multiply 150 times 6. Y'all see that? The AJE is simply 150 times 6. Big letters, like y'all getting old, like y'all gonna have to have when y'all get old. So 150 times 6 is what?
900.
900.
So what's your AJE gonna be? We're gonna debit insurance expense for the 900. And we're gonna credit what? Prepaid insurance for 900. So can we handle that now, possibly?
Sure.
Yes. So you said we can't handle it? Good. Let's look at one more type of prepaid insurance, or prepaid expense, excuse me. What do you know about your car and what happens each day and each year?
A card,
Depreciates.
Car,
as in a vehicle.
yeah,
It depreciates.
appreciation in value, goes down in value. So when you got auto equipment and building, okay, you buy them. Remember we were saying debit equipment, debit auto, credit card, credit notes payable. But when that item goes down in value, you've got to show the expense. So let's look at how we're going to do that. Suppose you buy an auto cost of $30,000. Paid $3,000 down, has a useful life for 4 years. So in 4 years, that asset will have totally depreciated. So our preceding entry, we debit, auto, credit, cash, credit, note payable. Can y'all make that entry?
Yes.
Okay. Now, when the auto goes down in value, because this is a long-lived asset, we're not going to credit the cost of the asset. First of all, how much did it go down in value? It's got a 4-year life. So if we divide 4 years into 30,000, we're gonna say it's going down at the rate of $7,500 per year. So we just took the 30,000 divided by 4, and we got 7,500. Okay, everybody see that?
So each year it goes down by 3,000.
7,500.
Yes.
So we're going to debit depreciation expense and credit accumulated depreciation for 7,500. So this is our AJE where we have long-lived, non-current assets that are going to last more than a year. We want to always to know what the cost of the car was. So we're going to show the depreciation and accumulated depreciation. What kind of an account is accumulated depreciation? It's going to be a contra asset account with a credit balance. And so we subtract it from the asset to get the net value of the asset. So we always want to know what the asset costs. We keep it in here at 30,000. Every time we take depreciation, we credit depreciation and we debit depreciation expense. So we're doing that every year. So this is the income statement account. It goes on the income statement. But rather than crediting Otto for 30, we want to know what it costs. We credit accumulated depreciation. And then these two items go together on the balance sheet. Otto less depreciation, so that net book value 22.5. We could have subtracted the 7,500 from 30,000, but we wouldn't know what the car costs. So on long-lived assets, we want to know what the cost is. So we just keep the credited amount that we would have subtracted in a special account, a contra account. This account will have a credit balance to offset the debit balance in the Otto. Are there any questions? Does that answer another journal entry, Keener? Okay. So we'll stop here today. And we'll pick this up on Thursday. So we'll go back over these on Thursday. And then we'll do the other couple of which are fairly easy and we'll be done.